Hey, it's Max from UNFTR reporting for the Midas Touch Network, and today we're going to head south of the border, across the pond, through the woods, and over the rainbow to follow the meandering and nonsensical foreign policy and economic maneuvers of President Trump. Now, in the president's sights at this moment are BRICS member nations, and specifically Brazil, who had the audacity to gather recently and discuss global economic policy during a time when, admittedly, the biggest player in the game is acting irrationally and irresponsibly. And in response, President Trump took to Truth Social to offer an irrational and irresponsible response. Now, as usual, there's way more to this story than trading barbs on social media. In fact, the United States is playing a very dangerous game right now, and the economic data are beginning to betray the Make America Great storyline. So to break it down, we're going to talk about tick data, BRICS alliance, Forex assets, de-dollarization, repo markets, tariffs, inflation, and something called the Washington Consensus. And if that all sounds like gobbledygook, I promise, in the next 20 minutes or so, you'll be more informed than all of Trump's cabinet. So let's go. Okay, so let's get out of the way what's really happening right now. Trump is using his defense of disgraced former President Jair Bolsonaro as a convenient smokescreen to pick a fight with Brazil. But the timing tells us everything we need to know about his real motivations.
And certainly Trump has, in the past and frankly in the present, tried to craft these alliances with these sort of unsavory autocratic figures, of which Bolsonaro is one.
Bolsonaro, for those who need a refresher, is Brazil's former president who Trump personally admires and wants to see freed from charges by the Brazilian government. So Bolsonaro's facing legal consequences for inciting an insurrection in Brazil that bears striking similarities to the January 6th riots here in the United States. Birds of a feather and all of that. But here's where it gets interesting. The timing of Trump's threat to slap a 50% tariff on Brazilian goods is markedly different from all those other boilerplate letters that he's been sending to nations that haven't negotiated trade deals with his administration. 90 deals, 90 days. Anyway, this isn't just another trade tantrum. This is strategic economic warfare disguised as trade policy. And here's the kicker that exposes Trump's fundamental ignorance of basic economics. We already have a trade surplus with Brazil. So let me repeat that for those in the back. The United States exports more to Brazil than we bring in from them. I mean, putting tariffs on a country that you already have a trade surplus with makes about as much economic sense as trying to put out a fire with gasoline. So what's this really about? This is a calculated scheme to punish Brazil for serving as the current head of the BRICS alliance that recently convened to discuss moving forward with a comprehensive and cooperative economic agreement. And yes, they are seriously discussing the eventual rollout of a BRICS Plus currency that could be potentially pegged to gold. So take a look at this graphic showing the expanded BRICS Plus membership. So we're not just talking about the original Brazil, Russia, India, China, and South Africa anymore. The alliance now includes Egypt, Ethiopia, Iran, and the UAE, with Indonesia representing a particularly significant addition given its massive population and growing economy. These aren't small players we can simply ignore or bully into submission. Now, let's be clear, a BRICS Plus currency isn't viable in the immediate future. The technical and political hurdles are enormous, and even the recent summit in Brazil stopped short of announcing any concrete timeline. But here's what should terrify anyone paying attention to global economic trends. These economies are growing, their populations are expanding, and their discontent with unpredictable U.S. policies and Trump's on-again, off-again tariff threats is reaching a boiling point. So when you have countries representing nearly half of the world's population actively discussing alternatives to the dollar-denominated system, dismissing their efforts as irrelevant is kind of dangerous complacency that has historically preceded major shifts in global power structures. So let's discuss something that keeps economists and financial market observers up at night, and that is the slow degradation of the US dollar as the world's reserve currency. Now again, we're not in panic mode. This isn't an immediate threat to our economic supremacy. The dollar will remain the world's primary reserve currency for at least the next decade, if not a little bit more. But our dominance is beginning to wane in ways that have profound implications for our economic future. So let's understand why being the world's reserve currency is actually such a massive advantage, because people talk a lot about that, but we really don't talk about exactly why. So when other countries hold dollars in their central bank reserves, they're essentially lending us money at incredibly favorable terms. So it means that in turn, we can run large deficits. We can maintain lower interest rates. We can exercise extraordinary influence over global financial markets. So it's been described as an exorbitant privilege, and it's one of the primary sources of American economic power. But here's what the data are telling us, and it's not encouraging. The share of US dollar holdings in global allocated reserves just declined to 57.7%. It's not a ton when you look at it on a percentage basis, but it represents on an absolute basis a lot of dollars. Even more concerning is the dramatic shift in sentiment among reserve managers. In just 12 months, the dollar has plummeted from being the most preferred currency among central banks to 7th in preference rankings. This is not a gradual shift. That's a fundamental reassessment of the dollar's reliability and attractiveness. So this graphic shows our foreign exchange reserves over time. And notice the significant decline that began in late 2022. So remember, this is what we hold in our reserve currencies. So initially, the decline that you see in 2022 was driven by the Federal Reserve's aggressive interest rate hikes to combat the inflation crisis, which in turn strengthened the dollar and forced other central banks to sell their dollar reserves to defend their own currencies. But here's what should concern us. Even as the dollar has weakened recently, these reserves continue to decline. So why? Because central banks around the world are actively and deliberately reducing their exposure to U.S. assets. This isn't just about currency fluctuations anymore. It's a structural shift in how global reserves are managed, with less emphasis on U.S. dollar, regardless of the exchange rate movements. So this brings us to the fundamental contradictions in Trump's economic approach that are accelerating this global shift away from American assets. See, Trump is essentially trying to solve a Rubik's Cube while wearing a blindfold. Every move that he makes to fix one problem creates 3 new ones. So he wants to bring manufacturing back to America, right? But that requires a weak dollar to make our exports more competitive. But his tariffs strengthen the dollar by making foreign goods more expensive relative to domestic alternatives. He needs other nations to buy our goods then, right? But he's alienating every single trading partner with unpredictable threats and constant trade wars. Trump needs interest rates to stay high to curb inflation, but he also needs to lower them to energize the housing market and reduce consumer debt burdens. He wants to keep prime-age labor participation high, but his administration is liquidating the federal workforce of exactly those prime-age workers. Plus, he's deregulating AI and investing heavily in its reckless rollout, which will undoubtedly hasten the decline in labor productivity and participation. Put simply, he can't have it both ways, always, all the time. Trump needs both a weak dollar and a strong dollar for his plan to succeed. He needs contradictory monetary policies. He needs cooperative trading partners while he's treating them as adversaries. Most major banks and economists have already substantially lowered their growth predictions as a result of his unpredictable behavior and what we're doing from a policy standpoint. And yet, when you add up all of these policies, here's what we can now expect: low growth, rising unemployment, and rising inflation.